So Oracle is considered one of the 10 titans, which refers to the 10 largest growth-oriented companies in the S&P 500 by market capitalization. They're called out because their size gives them outsized influence over the index and the broader U.S. equities market. So the 10 companies that typically included in the 10 titans are NVIDIA, Microsoft, Apple, Amazon, Alphabet, Meta, Tesla, Broadcom, and Oracle. So I dug a little bit of data up on Oracle. It's heavily financed. I'm going to share two stories with you about bond issuance, heavily financed through corporate bonds. Who buys these bonds? Let me explain. Large asset managers, BlackRock, Vanguard, Fidelity. Insurance companies like MetLife, Prudential, AIG. Pension funds, CalPERS, Cal STRS, Ontario Teachers, etc. Hedge funds and credit funds, Apollo, Oaktree, where we heard that before. KKR Credit, where we heard that before. And sovereign wealth funds via global bond portfolios. Who are the shareholders, the big shareholders in Oracle? Okay. Vanguard Group, BlackRock, State Street, Fidelity, T. Rowe Price, and Capital Group. The largest insider, as you know the name, is Larry Ellison, has a massive stake in the company. So there was a story out of, and before I jump into the story, as I always humbly ask, if you not subscribed to the channel, please subscribe so we can keep growing the community. Welcome to all the new subscribers, all the folks who have been here since the beginning. I really appreciate all of you. So there was a story out of Bloomberg. I'm stepping back about 60 days now, and I'm going to bring you fast forward to where we're at as of today with Oracle. And please hear me out on this. I won't go too long today. So September 10th, a story comes out 60 days ago, comes out of Bloomberg entitled Oracle Shares Surge Most Since 1992 on Cloud Contract Wins. Oracle shares gained the most since 92 after the company gave an aggressive outlook for its cloud business, cementing the software maker's place in the race to support demand of artificial intelligence computing. Oracle has recently found success in the red-hot cloud computing market, and it's emerging as a key provider of AI computing capacity, competing against cloud leaders Amazon, Microsoft, and Alphabet's Google. Bloomberg reported previously that Oracle signed a deal with ChatGPT operator OpenAI to supply 4.5 gigawatts worth of data center capacity. They were back to the data centers again. Enough energy to power millions of Americans' homes. Oracle also counts NVIDIA and ByteDance's TikTok as major cloud customers. Such deals help boost remaining performance obligations, a measure of bookings, to $455 billion at the end of the first fiscal quarter, Oracle said Tuesday. That's more than 4 times higher than the same period a year earlier. It's also roughly 4 times Google's backlog, according to Bloomberg Intelligence, suggesting Oracle's cloud growth rate is poised to surpass Google's. It was an astonishing quarter, and demand for Oracle cloud infrastructure continues to build, according to Chief Executive Officer Safra Catz. He says the company signed 4 multi-billion-dollar contracts with 3 different customers in the quarter and expects to sign up several additional customers in the coming months, pushing remaining performance obligations above $500 billion. We're all kind of in shock in a very good way, according to Brad Zelnick, an analyst at Deutsche Bank, said during Oracle's earnings conference call. Again, we're back in September now. There's no better evidence of a seismic shift happening in computing than these results that you just put up. And now there's another seismic shift taking place, which is not good, but I'm going to share it with you. Oracle stock was already on a tear before the latest financial results, up 45% this year, 4 times the gains seen in the broader S&P 500 index. Oracle's forecast highlights the need for global AI developers to keep accelerating their investments, right? And we know they've been doing it, in droves, billions, trillions of dollars. Here's the end of the article, and then we'll shift over to current day. Major U.S. companies have in recent days given investors reason for optimism about the pace and sustainability of AI spending. All right, so optimistic investors. That day, I believe their stuff came out about Larry Ellison's net worth spiked so much that he became, I think, the richest person in the world for a period of time. So it was all the rage, right? Oracle, Oracle, Oracle. So on the date of that article, September 10th, Oracle's closing stock price was right about $328. All right? Let's fast forward now to yesterday, Friday. Close of business on would have been the 14th of November, just about 2 months after the article I just shared with you. The stock price closed at $222. Okay, so in the span of about 60 days, it's dropped 32%, and that equates to about $289 billion of lost value in 60 days. Okay, so why the sea change? What's happening? Well, go back and look at the videos I've been doing for the last 2 weeks, and you'll see what's happening, in a broader sense. But we're going to focus on Oracle, right? One of the 10 titans. And that was in my description today. The titans will fall. The titans do fall. So, story out of Bloomberg yesterday. Remember, the article concluded that I just shared with you about investors have reason for major optimism. Here we go. Oracle debt derivatives jump as traders hedge AI bets. Again, out of Bloomberg yesterday. The cost of protecting Oracle corporate's debt against default rose on Friday. I'll explain that quickly for you in a second. It's the credit default swaps, okay, the CDS. But it says after surging by the most since 2021. So yesterday, the cost, says, of protecting Oracle's debt, right, the bonds it issues against default rose by the most since 2021. As jittery investors and lenders rush to hedge against the billions of dollars the software giant is pouring into AI. So 60 days ago, all optimism. Fast forward, and they're jittery. Oracle, known for its namesake database software, saw the spread on its 5-year credit default swaps jump as much as 4.36 basis points on Friday to about 106 basis points. That's the highest since November 2022, according to ICE Data Services. Credit default swap prices usually rise as investor confidence in the company's credit quality falls. So we're not just talking about, the oak trees and the KKRs, and the ones I've been sharing over the past couple of weeks. This is one of the big ones, all right? And you have investors, bondholders who are starting to freak out, okay, and demanding more, okay, to hedge against what is, I'm going to explain to you in a second, is perceived as, a potential for default. It says the swap prices rise as investor confidence in the company's credit quality falls. Worries that Oracle's rising leverage may push its credit ratings over the junk cliff to junk bond status, as well as hedging related to its tens of billions of dollars in AI debt financing, are likely behind the upswing, according to Bloomberg Intelligence Rob Schiffman. Let me explain briefly from ChatGPT. CDS spread, again, if you guys don't understand what it is that the annual cost to insure against a company defaulting, okay? And when the spread widens or jumps, what it means is that the market thinks that the probability of default just went up. The spread widening is the market repricing the risk of failure. That can be due to bad earnings, liquidity crunch, asset write-downs, a regulatory hit, refinancing risk, or sector contagion, okay? i.e. CRE, private credit, hyperscaler spending slowing. Look at yesterday's video. We discussed with Scion Asset Management closing down, and Michael Burry coming out saying that the hyperscaler thing is going to become, in his opinion, a major issue. Sector contagion, a sector that we know that all the biggest banks in the world are heavily invested in, all the pension funds, life insurance companies, and so we're talking about potential sector contagion that's contributing to this the spread widening. Okay. So what happens? Bond investors demand higher yields. Higher spreads translate into higher borrowing costs for a company like Oracle. Existing bond prices drop, okay? And then what happens after that? The stock prices get hit, okay? So we see what happened as of yesterday. The stock was down, 32% since that cheery, happy article came out 60 days ago. So the credit defaults, it says Oracle alongside OpenAI and SoftBank. I did a video on SoftBank a few days ago as well, where they sold their entire position in NVIDIA, and they're piling into more AI stuff, right? It says SoftBank Corp is spearheading Stargate, a project. Let me step back. Sorry. Oracle alongside OpenAI and SoftBank Group is spearheading Stargate, a project to rapidly invest $500 billion to build AI infrastructure. As part of that effort, a club of about 20 banks is supplying roughly $18 billion to finance the project and to construct a data center campus in New Mexico, which Oracle will be the tenant. Discussed that on several shows over the past few days. They step in as the tenant, right? But they have to have massive cash flow to be able to pay the lease obligation to whoever the owner is. Separately, Oracle sold $18 billion, here we go, of U.S. high-grade bonds in September, just probably around the time of that article I just shared with you, as it boosts spending to meet the needs of AI boom. So they issue bonds, that's debt, okay? And what happened is now these bondholders are getting freaked out. In the near term, Oracle's bondholders and lenders are likely to keep hedging, okay, which is going to drive the cost of borrowing even higher. According to Morgan Stanley analyst wrote last month, they see the firm's net adjusted debt more than doubling to roughly $290 billion by fiscal year 2028 from around $100 billion right now. As spending on AI infrastructure increases, questions regarding future revenue and cash flow generation have broadly hit stock and bond prices, Schiffman and BI's Alex Reed wrote in a Friday note. And folks, again, from a layperson's perspective, you haven't seen anything yet. It's amazing how fast the sea change can shift, right? From all positivity, stocks going straight up, to what we are seeing unfold quickly with the top companies, which is a lot of spooked out investors, a lot of spooked out shareholders, and more so investors, right? When the shareholders start to really catch on and see what's happening, I wouldn't be surprised if we start to see, a massive bursting of the bubble, in the S&P and the related NASDAQ. But again, it's this doom loop, right? Because as I shared with you yesterday, Michael Burry was out saying, look at the useful shelf life, if you will, of these chips and some of this AI hardware is only a couple of years, and it becomes antiquated. And we're talking about, them having to repay massive amount of debts, and they're looking at over a several-year period. Okay, so how is that? How is it going to happen? Okay, how are they going to come up with the money? Not making that much money now. Well, Oracle, some of the top 10 are, but many of the players in the sector are not making any money, right? They're zombies. Okay, I don't want to go too long today. That's Oracle, okay? One of the 10 titans. So the bondholders are hedging the risk because they see the potential for defaults rising. If you start seeing defaults in a company like Oracle, and some of the other, of the 10 titans, watch out below, okay? Thanks for watching. If you enjoy the content, leave me a like. If you're not subscribed, hit the subscribe button for me. Love to see your thoughts and comments. With that being said, I'll talk to you all soon. Bye.